All right, strap in, everyone, because we are diving headfirst today into UPL Limited and their recent performance.
Yeah, it's fascinating stuff.
Oh, absolutely. And we've got, let's see, we've got their investor presentation and, of course, their financial results, which dropped January 31st, 2025.
Yeah.
Yeah.
And let me tell you,
Yeah.
there's a lot to unpack.
There is.
What I'm finding really interesting is how UPL is handling this, well, kind of shaky global economy.
Right.
Their Q3 was particularly strong.
Okay, so you say strong,
Yeah.
but for those of us who maybe don't spend all day, looking at financial reports, can you
Yeah.
break it down? Like, what are we talking about?
Yeah, so when I'm looking at UPL, what I'm seeing is really impressive growth,
Uh-huh.
especially their revenue and something called EBITDA.
Oh, there's that word.
Yeah, EBITDA. It's a finance term,
It is.
but we can demystify it.
Okay, please do.
So EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Okay, and what does that mean for, like, a normal person?
Basically, it shows how profitable a company is, like
Right.
just from its core business operations.
Oh, okay.
You're stripping away things like their debt costs and, those weird accounting things.
So you're getting down to, like, the nitty-gritty,
Exactly.
the core.
Yeah, it's all about how efficiently they're making money from what they actually do, turning their products and services into cash.
So the higher the EBITDA, the better, I'm guessing?
Exactly. And let me tell you, UPL's EBITDA is not just good, it's sky high. We're talking 2,163 crore.
Whoa.
That's a 420% jump.
Okay, 420%. That's pretty huge.
It is a huge sign that they're running a tight ship, especially with everything going on globally.
So, okay, their EBITDA is amazing, but let's rewind a bit.
Okay.
What about just their straight-up revenue? What's happening there?
The revenue picture is equally impressive.
Okay.
UPL pulled in 10,907 crore for Q3.
Got it.
So that's a solid 10% growth year over year. And if we break it down,
Yeah.
it gets even more interesting. So volume, meaning how much they sold, that increased 9%.
Okay, so people are buying more of their stuff.
Right, exactly.
Gotcha.
And they also had a 5% increase from price improvements.
Okay, so they raised prices, but people are still buying.
Right. That suggests they have some real pricing power.
That's a good sign,
It is.
especially in, a tough economy.
It is. Now, of course, there was a slight dip, 4%,
Okay.
due to the, always fluctuating foreign exchange rates.
Of course, the currency roller coaster never stops.
Never.
But even with that, they still manage double-digit growth.
Exactly.
That's got to be a pretty good indicator of, I don't know, overall health.
It definitely is, and it gets even better.
Okay, lay it on me.
Remember that EBITDA margin we were talking about?
Yeah, the profitability from their operations.
Exactly. Well, theirs expanded by a massive 1,560 basis points.
Wait, hold on. Basis points. Now you're just using fancy words.
Oh, sorry.
Yeah.
Sometimes I fall into finance jargon.
Yeah, a little bit.
A basis point is basically 1/100th of a percentage point.
Okay.
So that huge jump actually translates to a 15.6% increase.
Oh, okay. So it's like a more precise way of talking about percentages.
Right, exactly. It helps us get into the nitty-gritty.
Gotcha. So their profit margin relative to their revenue has jumped up significantly.
Exactly.
Okay.
And that's a very good thing.
It sounds like it.
It tells us that UPL is getting really good at turning revenue into actual profit.
Nice.
Part of it is due to those price improvements we talked about, but it also seems like they're selling more of their higher margin products and finding ways to make their products more cheaply.
So they're fine-tuning things.
They are.
Okay, but, we can't talk about financials without talking about the big D.
Yeah.
What's UPL's debt situation looking like?
Well, this is where it gets even more interesting because a lot of companies are, frankly, struggling with debt right now.
Right.
UPL has actually managed to reduce their net debt.
Really?
It's down to $3,021 million, which is a drop of $264 million in just 3 months.
Wow. That's a pretty aggressive reduction.
It is.
What do they do? Win the lottery or something?
I wish it actually boils down to something called working capital management.
Okay. Another term I'm going to need you to break down for me.
Sure. So working capital is basically the money a company has tied up in its day-to-day operations.
Gotcha.
It's like the difference between their short-term assets, like cash, and what people owe them, and what they owe to suppliers.
Okay.
So good working capital management means making sure you have enough cash to cover those immediate expenses, but you're also making that money work for you,
Right, like making sure people are paying their bills on time and not having a bunch of extra stuff just sitting in a warehouse.
Exactly. It's about being efficient.
So it sounds like UPL has been really focused on their working capital,
They have.
and that's helped them free up cash to, tackle that debt.
It has, and there's more.
Oh, there's more.
They've also been really smart about managing their debt through various initiatives.
Okay, so before we dive into those debt initiatives,
Sure.
let's pull back a little
Okay.
and look at, the bigger picture of how they've done over the first 9 months of their fiscal year.
Right, so we've seen their amazing Q3,
Right.
but how does that fit into the bigger picture?
Exactly. Was that just a fluke, or is that part of a bigger trend?
Well, for the 9-month period, their revenue is right on track. It's reached 31,064 crore,
Okay.
which is a 7% increase year on year.
Okay, so steady growth.
Steady growth. Their EBITDA for this period is also up a healthy 36%
Nice.
to 4,884 crore,
Wow.
which tells me their Q3 performance wasn't just a one-off.
Right. Wasn't a lucky break or anything.
Seems like part of a solid strategy.
You've got a plan, and they're sticking to it.
I do.
But, okay, UPL isn't just one big company, right?
Right.
They've got all these subsidiaries like UPL Corporation and Advanta.
They do.
How are those performing? Are they part of this success story too?
That's a great question. And yes, absolutely. Those subsidiaries are playing a key role in UPL's overall success.
Okay.
UPL Corporation also had strong results.
Okay, like what?
Revenue is up 8% to 22,313 crore.
Wow, so they're following the same trend as the parent company.
Exactly.
That's great.
And their EBITDA increased an incredible 132% to 2,713 crore.
So again, that same margin expansion we were talking about.
Exactly. It's definitely a positive sign.
Okay, so multiple parts of the UPL machine are running smoothly,
They are.
but can we get a little more granular?
Sure.
Did they say anything about different regions?
They did.
Like, are some markets hotter than others?
Yeah, they gave some regional insights, and it seems they're really targeting their products to the right places.
Okay, so what did they say?
UPL Corporation saw really strong growth in Latin America and Europe.
Interesting.
Yeah, and fungicides and insecticides are leading the way there.
Fungicides and insecticides in Latin America and Europe. That makes me think there's something going on with, like, specific crops or maybe even climate change.
You're spot on. We need to think about why those sales are up.
Yeah.
What's really interesting is Latin America has been battling new strains of soybean rust.
Oh, wow.
Yeah, it's a nasty fungal disease.
Yeah.
It can really wipe out crops. And then over in Europe,
Yeah.
they're worried about the fall armyworm.
What's that?
Well, it's an invasive pest,
Oh, no.
and it can damage a lot of different crops.
So UPL is basically providing solutions to some pretty major problems.
Right, they're not just selling products.
Right.
They're helping to protect food supplies around the world.
That's pretty impressive.
And on that note,
Yeah.
UPL also mentions strong in-season demand in North America.
Oh, interesting. So even in a place like North America, where agriculture is pretty well established,
Right.
they're still finding ways to grow.
It all comes down to this increasing unpredictability we're seeing in weather patterns.
So farmers have to be more reactive when it comes to, pest and disease control.
Exactly.
Which means they need UPL's products more than ever.
Exactly.
It really highlights how important it is to understand the why behind the numbers.
It does. It's not just about seeing sales go up.
Right.
It's about understanding what's driving those sales.
The context.
Exactly.
Okay, so we talked a bit about UPL Corporation,
We did.
but they've got a whole bunch of other subsidiaries under their umbrella.
They do. It's worth digging into how each one contributes to UPL's overall strategy.
Let's do it. Where should we start?
Let's start with UPL SS.
Okay.
They're a subsidiary in India.
Gotcha.
They reported a 6% revenue increase, reached 2,552 crore.
Solid growth.
Solid growth, but their approach is really interesting.
What are they doing?
They're launching new products, but also cutting out the ones that aren't doing so well.
Streamlining.
Exactly.
I like it. Getting rid of the dead weight.
Yeah, got to stay lean and mean, especially now.
Right.
But of course, India is just one piece of the puzzle.
What about their other subsidiaries, like Advanta?
Right, so Advanta is their seed business. They brought in 3,095 crore, a more modest 2% growth year on year.
Okay.
Their main revenue drivers were grain sorghum, sunflower, and corn seeds.
Okay, so they're feeding the world, literally.
Literally, but their margins were a little tight this time.
Oh, how come?
Well, input costs are up.
Like what kind of input costs?
Things like fertilizer and packaging materials, all that stuff.
Right, all the stuff that goes into making the seed.
Exactly.
Okay.
And they also had lower recoveries.
Lower recoveries. Now, that's a new one for me.
Basically, it means they're not getting as much return on their investment as they were hoping for.
Ah, I see.
It could be due to lower crop yields or just difficulty collecting payments.
Ah, so it's like a whole bunch of factors.
It is. It can be tough out there for seed businesses.
So Advanta's facing some challenges, but is UPL just letting them figure it out on their own?
Oh, no, they're not.
Okay.
They're stepping in to help. They recently brought in a new investor for Advanta.
Oh, really?
Yeah, Alpha Wave Global.
Okay.
They placed a 12.44% equity stake for a cool US $350 million.
Whoa, $350 million.
Yeah.
That's a serious chunk of change.
It is. It shows that UPL really believes in Advanta's potential.
So it's a vote of confidence and a cash infusion.
Exactly. It's a clever move.
Tell me more.
So $100 million of that is going directly into Advanta to help them grow their operations, develop new seed varieties, and maybe even acquire some smaller competitors.
So they're giving them the resources to really compete.
That's the idea.
Smart move.
And the other $250 million,
Yeah.
well, that's a secondary sale by UPL.
Meaning?
They're selling some of their existing shares in Advanta to Alpha Wave Global.
Oh, so it's a way for them to reduce their own debt.
Exactly. And it frees up cash that they can use for other things.
Very strategic.
It is.
So they're getting a cash boost and betting on Advanta's future success.
Exactly. It's a win-win.
Okay, we've covered UPL SAS and Advanta. What about their other subsidiaries? What else is going on?
Well, there's Superform.
Okay.
They're a little different. They're mostly in the specialty chemicals business.
Okay.
Things like flame retardants, stabilizers, and performance polymers.
Oh, wow. That's a whole different world.
It is.
So how are they doing?
Their revenue increased 5% to 7,594 crore.
Okay, so not bad.
Not bad, but their margins were a little lower this time around.
Oh, what happened there?
A few things. They mentioned something called phasing in captive business.
That sounds like jargon.
Sorry, it basically means they're shifting some of their production to be used internally by other UPL subsidiaries.
So, like, instead of selling it on the open market, they're using it themselves.
Right. It can sometimes impact margins in the short term.
Right, but it might be a good long-term strategy.
It could be. It might mean they're trying to control more of their supply chain.
Which makes sense these days.
Right.
And with all the uncertainty in the world.
Companies are realizing they need to have a more stable supply chain.
So it could be a smart move in the long run.
It could.
Okay, but you mentioned Superform makes flame retardants.
Yeah.
And I have to ask, is that raising any red flags in terms of, sustainability?
You're right to ask that. Flame retardants have gotten some bad press because of potential environmental and health concerns.
Right. It's not exactly the most eco-friendly image.
It's not, and it's something to keep an eye on.
Yeah.
UPL has been talking a lot about sustainability.
They have.
But we need to make sure they're walking the walk, especially when it comes to their subsidiaries.
Absolutely. Transparency is key.
It is.
Okay, before we get too sidetracked, we have one more subsidiary to cover, Nurture.
Right. They're the ones focused on all things sustainable agriculture.
Exactly. How are they doing?
Well, they're still in the early stages.
Yeah.
But they're making good progress. Their revenue reached 36 crore year to date.
Okay.
And their EBITDA loss is actually getting smaller.
Oh, so they're moving in the right direction.
They are. It's definitely a positive sign.
Okay, what are some of their key initiatives?
So they're really focusing on expanding their product basket on nurture.retail.
Nurture.retail.
It's their online platform for farmers.
Oh, cool.
Yeah, farmers can go there to find all sorts of sustainable agricultural inputs.
Like what?
Biofertilizers, biopesticides, that kind of thing.
So it's like an online marketplace for eco-friendly farming.
It is, and they're getting more users every month.
So people are using it.
They are, which is a good sign.
So they're building a digital ecosystem for sustainable farming.
Exactly. It's a smart move.
What else are they doing?
They're also working with different organizations and forums to really expand their footprint in the sustainability space.
Okay.
So they're collaborating with farmers to implement those regenerative practices, promote biodiversity,
Yeah.
and reduce the environmental impact of agriculture.
So they're really taking a holistic approach.
They are.
Not just focusing on one thing.
Right.
It's about the whole system.
Exactly. And it's great to see a big player like UPL investing in this space.
It is, but we have to bring up the elephant in the room again. UPL's overall financial health,
Right.
debt reduction is great.
Yeah.
But is that enough to, really reassure investors.
Yeah, especially in these uncertain times.
With all these investments in subsidiaries, are they spreading themselves too thin?
You're asking all the right questions.
Well,
Let's really examine their working capital and debt situation
Okay.
to get a better understanding of their financial strength.
All right, let's do it. I'm ready to get into the details. Okay, so we've covered a ton of ground with UPL. I mean, we've talked about their growth and their investments and, sustainability and how they're handling debt.
Yeah, it's been quite a journey.
It has. But, one of the most impressive things we've talked about is their working capital management.
Absolutely.
They've really shrunk those working capital days,
They have.
which has freed up a lot of cash.
Yep.
Can you remind us, working capital days, what does that even mean?
Right. So working capital is the money tied up in the day-to-day, right?
Uh-huh.
So working capital days tells us how long it takes to turn those investments, like inventory, into cash.
Okay.
And a smaller number means things are running more smoothly and efficiently.
Gotcha. So it's like a measure of how quickly they're turning things around.
Exactly. And UPL has managed to decrease those days by 48
48 days.
compared to last December.
That's almost 2 months.
It is.
They're getting a lot more bang for their buck.
Right. Squeezing more value out of every dollar.
But how did they pull that off?
Well, a big part of it is better inventory management.
Okay.
Their inventory days are down by 31,
Okay.
which is a reduction of over 3,900 crore in inventory value.
That's huge. So they're basically avoiding having too much stuff just sitting around.
They are. They're getting really good at forecasting demand and managing their supply chain.
So they're not overstocking and tying up money they don't need.
Right.
Makes sense.
It's about being lean and agile
Exactly.
and reacting to the market quickly.
So what about the other side of that?
Uh-huh.
The money customers owe them.
Yeah, their receivables.
Yeah. How are they managing that?
They've also improved there.
Yeah.
Their receivable days are down by 24.
So they're collecting payments faster.
Exactly. That means almost 3,100 crore less tied up in those outstanding invoices.
Nice. And how do they manage that?
Better collection processes and something called non-recourse factoring.
Non-recourse factoring.
Yeah.
Sounds complicated.
It's actually pretty straightforward.
Okay. Enlighten me.
Basically, they sell those outstanding invoices to a third party,
Okay.
but at a discount.
Okay.
But the good thing is they get cash immediately instead of waiting.
Okay.
And non-recourse means that the third party takes on the risk if a customer doesn't pay.
Oh, so it's like they're offloading that risk.
Exactly. It helps them improve cash flow without taking on more risk.
Very clever. So they're doing everything they can to free up cash,
They are.
which brings us back to their debt.
Uh-huh.
We know it's down, but is it down enough?
Yeah, that's the question.
Especially now, with the economy being what it is.
Well, it's definitely a good start, but there are always risks to think about.
Like what?
Well, interest rates are changing all the time.
Yeah.
If they go up, it could be more expensive for UPL to manage their existing debt.
Right. So they have to be careful.
They do. It's all about finding that balance between paying down debt and still investing in growth.
It's a tightrope walk for sure.
It is.
Okay. But speaking of growth, are there any new areas UPL might be exploring?
That's a good question.
Like, are they hinting at any big acquisitions or new markets?
They haven't specifically mentioned acquisitions,
Okay.
but they have talked about expanding into some high-growth markets.
Like
The biologicals market is one they seem interested in.
biologicals.
Yeah.
Like organic pest control and stuff.
Exactly. It's all about using natural sources like bacteria or fungi instead of harsh chemicals.
Oh, so it's more environmentally friendly.
It is, and it's a big growth area in agriculture.
It sounds like they're trying to stay ahead of the curve,
They are.
moving away from those conventional chemicals and embracing more sustainable solutions.
Exactly.
That's got to be good for everyone, right?
In the long run, yeah, it's good for the environment, good for consumers, good for business.
But with all this growth and expansion, are there any downsides we should be aware of?
Well, there's always some risk, right?
Of course.
When you're expanding into new markets, there are always challenges.
Like what?
Different regulations, different consumer preferences, managing global supply chains.
Right. So it's not as simple as just setting up shop in a new country.
It's not. They're going to need to be really smart about how they approach these new markets.
So even though UPL looks promising,
Yeah.
investors still need to do their homework.
Absolutely.
Look beyond just the hype.
Yeah. Understand the company, the industry, all of it.
Because knowledge is power.
It is, especially when it comes to investing.
Well said. I think we've really dug deep into UPL Limited today. We've seen their impressive numbers and all those smart moves they're making.
Yeah, and we've talked about the challenges they face and the opportunities that are out there.
Exactly. So to wrap things up,
Yeah.
any final thoughts on UPL?
Well, I think they're at a really interesting point in their journey.
Uh-huh.
They're leading the way in an industry that's changing rapidly.
Yeah, agriculture is facing so many challenges these days.
It is climate change, growing populations, the need for more sustainable practices.
And it seems like UPL is ready to tackle those challenges head on.
They do, but they'll need to keep innovating, stay disciplined financially, and stay focused on sustainability.
It'll be interesting to see what they do next.
It will.
Well, on that note, it's time to wrap up our deep dive into UPL Limited.
Yeah, thanks for joining us.
We covered a lot today. Their amazing Q3, their investments, their commitment to sustainability, and all those financial strategies.
It was a lot.
It was, but we hope you found it insightful and maybe even a little bit exciting.
Yeah, and as always, keep learning, keep digging, and keep asking questions.
Because the more you know, the better equipped you are to navigate the world of finance.
Couldn't agree more.
So until next time, happy investing, everyone.